Welcome back to part B of this presentation, where we will discuss learning objectives 3 and 4. In learning objective 3, we want to demonstrate an understanding of key sustainability accounting analytical tools. So the first analytical tool that we will be looking at is identification of environmental costs. So before we can identify environmental costs, let us define what environmental costs are. These are the costs that are incurred because poor environmental quality exists or may exist. The United States EPA defines 5 tiers of environmental cost. EPA stands for Environmental Protection Agency. Number 1 is conventional cost. This refers to those direct costs associated with capital expenditures, such as buying a carbon sequestration machinery, for example. Raw materials costs and other operating and maintenance costs will also be part of conventional costs. The second one is hidden costs. This refers to hidden regulatory costs from activities like monitoring and reporting of environmental activities and emissions, the cost of searching for environmentally responsible suppliers, and any ongoing cost for cleaning up, for example, a contaminated land or river. The third one refers to contingent costs. This may include contingent liabilities resulting from failure to clean up, say, contaminated sites, also fines or penalties for non-compliance with regulations. Now, these are still considered contingent costs because they are not specified costs yet. They are contingent on something happening in the future, like failing to clean contaminated sites. So we do not know exactly how much those contingent liabilities would be or fines because it is sometime in the future. Relationship and image costs pertain to those costs that are less tangible or benefit. For example, this relates to good community relations or bad publicity or bad public image. Tiers 1 to 4 are actually private costs. And the last one, societal cost, is obviously a cost to society. So these are the costs that organizations may impose on others, the environment, and society, for which they may not be held legally responsible and which can't be compensated for in the legal system. So for example, the company is emitting emissions to the environment and the people living near their factory is having chronic disease like asthma. The cost of hospitalization is not paid for by the company unless the government penalizes them or asks them to compensate the community. But otherwise, the cost for hospitalization is borne by the citizens or by the government for running public hospitals and the like. Now, full environmental costing is the assignment of all environmental costs, both private as well as societal, to the products or to the services provided by the entity. Full private costing is the assignment of only private costs to individual products and services. So private costing is probably a good starting point for many entities because recall that many companies still do not adopt sustainability approach. So for those who are wanting to start, private costing is probably a good starting point. Private cost can be assigned using data created inside the entity. The second technique that we're going to learn is this LCA, the life cycle assessment. This identifies the environmental consequences of a product through its entire life cycle, and then it searches for opportunities to obtain environmental improvements. As a start, companies might want to look at their supply chain. Notice that the raw materials that the entity will be buying is really not controlled by the entity but controlled by their suppliers. However, the entity has a choice. Which suppliers should they be choosing? So whilst the supply of goods, the supply of services to the firm is controlled by their suppliers, the firm can choose which suppliers do they want to continue their relationship with. Now, in the production as well as in the packaging of the products that the company or the entity is producing, that in itself is controlled by the entity. All right. Now, once they have produced the product and chosen what sort of materials they will use for the packaging and all that, these will go to their customers, it will be sold, and then once it's sold, that product that they have sold is now under the control of their customers. Now, at the end of the life of the product, the customers have a choice whether to recycle or to have the product disposed of. So that's controlled by the customers. However, again, to a certain point, the entity could do something like, for example, choosing materials that are highly probable or possible to be recycled rather than just disposed of at the end of the product's life cycle. So life cycle cost assessment has 3 stages, and it's easy to remember because it starts with I. So the 3 I's of life cycle assessment stages are: first, inventory analysis. This is where the entity will specify the types and quantities of the materials and energy inputs needed, as well as the resulting releases in the form of solid, liquid, and gaseous residues. The second stage is impact analysis. This is where the entity will assess the environmental effects of competing designs and provides a relative ranking of those effects. And the third stage is the improvement analysis. This is where the entity has the objective of reducing the environmental impacts revealed by the first 2 I's, the inventory and the impact analysis. Let's have a quick illustration here. This is looking at the life cycle cost assessment of the cup. So the questions that need to be asked will, for example, include: what are the materials required for each type, the paper cup and the polyfoam cup? What are the energy requirements to produce each type? What kinds of effluents and emissions are produced by each? What's the recycle potential? And what are the resources required for ultimate disposal? So the first thing to do is the first I, inventory analysis. You'll have a look at the material usage per cup. So from the looks of it, the wood and bark, 33 grams for paper cup and 0 for polyfoam cup because it doesn't use wood and bark. Petroleum, 4.1 for paper and 3.2 for polyfoam cup. So the finished weight is 10 grams for paper cup and 11.5 for polyfoam cup. Well, obviously the heavier, the more weight it has, the more land waste there will be, the more it will become a solid waste and will be put into the landfill later. So the less, the better. All right. In terms of utilities per milligram of material, paper cup uses 9 to 12,000 kilograms of steam, whilst polyfoam only 5,000 kilograms of steam. So it looks like polyfoam is the winner. In terms of power, 3.5 GJ here for paper cup, for polyfoam cup 0.4 to 0.6. So again, polyfoam cup is the winner. The less, the better. All right. So what you can see here, what we have shown you here is the inventory of the material usage, the utilities, the water, effluent, air emissions per milligram of material, the recycle potential, as well as the ultimate disposal. So for example here, paper cup, at the primary use, the recycling potential is possible, but for polyfoam, the recycling potential is easy. So this is the winner, polyfoam cup. This one, paper cup, not so good. But after use, the recycling potential is low, polyfoam cup high. So again, that's the winner. This is not that good in that sense. But when it comes to ultimate disposal, you will see here that the paper cup is biodegradable, whereas the polyfoam cup isn't. So you will notice here it's the polyfoam cup, that's the winner. Here the paper cup is the winner in terms of material usage, and it's not that easy. When we're just looking at the line by line inventory analysis, we can see that paper cup has some advantages, but polyfoam cup also has some advantages in terms of its environmental impact. So many companies will kind of put it into one unit of measurement, because here we have different units of measurement. Some are in kilograms, some are in grams, some are in terms of recycling potential. You can't really put a number in that, and so forth and so on. So companies, in order for them to go to the impact analysis, for example, where we will assess the environmental effects of competing designs and provides relative ranking. So some companies will put some dollar value in it. So for example, in terms of material usage, it's about 1 cent for paper cup, it's 0.004 for polyfoam cup, so that's a lot cheaper in terms of polyfoam cup. Utilities, 0.003 for polyfoam cup, it's 1.2 cents for paper cup. For contaminant-related resources, is 0.008 for paper cup. Again, it's less for polyfoam cup. So we can see here that now we are putting dollar value, and so we can compare the unit of measurement. We're using the same unit of measurement. And at the end here, we can see the environmental cost per unit for paper cup is 2.9 cents compared to 0.008 for polyfoam cup. So again, we can see here that this polyfoam cup is the winner. So if we are to look at the impact analysis that we've conducted and rank these two choices, we will say, well, looks like polyfoam cup is ranked 1 and paper cup will be ranked 2nd. All right. Now, how about if we take into account those things that you can't quantify, the benefits that cannot be quantified? Like for example, we know that paper cup is biodegradable, whereas polyfoam cup isn't. Well, is biodegradability very important? Well, for some actually it is, because for those materials that are not biodegradable, it will take hundreds of years before this material will actually disintegrate. All right, perhaps it won't even disintegrate in hundreds and hundreds of years if it is not biodegradable. So some companies might say, all right, even if paper cup is not so good in terms of the environmental cost per unit compared to polyfoam cup, let's do an improvement analysis. What can we do in terms of the paper cup's material usage? Can we make it thinner, for example? Can we use different type of machinery so that it doesn't use a lot of electricity, utilities in its manufacture? If it can, then we have achieved the objective of improving the product in order for it to become more environmentally friendly. And so this is part of life cycle costing and life cycle assessment analysis. All right, let's go to number 3. So we have had the first analytical tool as the identification of environmental cost, then we've got life cycle costing as the second, then we go to the third, CBA, cost benefit analysis. Here in exhibit 17-9, The cost of new packaging has been analyzed according to its costs and its benefits. So here on the top are the costs. There is one setup cost for using returnable cartons and the total of the purchase of new cutting equipment, design, print cost, additional cost of purchasing returnable cartons is 7,500. That's the initial net outlay. Here are the benefits that can be valued in dollar terms. So the cost reductions from the business for using returnable cartons instead of disposable cartons will be that fewer cartons will be required, increased cartage, increased liner costs, labor differences, well, it says here is negligible, but the costs reduction over the expected life of 4 years is quantified at 19,160. So the net benefit over the expected life of 4 years is still 11,660. All right, so then that means this is actually a highly beneficial endeavor to change to the new packaging. All right, there are of course other intangible benefits such as industry reputation, because the company can be perceived as environmentally friendly. You can't really put a dollar value in that. Customer relationship, meeting obligations under the packaging covenant and therefore avoiding future penalties or regulations, and reduce packaging waste in the supply chain. So these are unquantifiable, but even the quantifiable aspect of this initiative actually provides a cost savings. So this is one example of an eco-efficient opportunity. All right. Another thing, the cost of recycling waste could be another opportunity that we could do a CBA, a cost benefit analysis. So here we've got the depreciation of the waste regrinding machine, energy needed to run the regrinding machine, and we're looking at recycling of the waste here. Instead of dumping this waste into the landfill, we are regrinding it. All right, and so we are able to have total costs of 8,343 in terms of, these are the costs that we will incur. However, we will save in terms of raw material usage 47,628 as a result of recycling. So again, this is an eco-efficient initiative because we have a net benefit from the recycling of 39,285, nearly 40,000 savings. All right, so CBA is another good analytical tool in order for us to do something that is environmentally friendly. And the fourth one that I'd like to introduce to you is activity-based costing. Those of you who have taken cost accounting would have been introduced to activity-based costing. So here is an example of how we could use ABC in sustainability management. All right, let's suppose that Melbourne Industrial Limited is an enterprise fund owned by a government body. All right, so here they are in manufacturing. All right, so they produce two types of gadgets, the Celerium and Millennium. MIL recently received significant criticism from environmental groups, local residents, and the federal government concerning its environmental performance. So the president of MIL, Get W. Orid, wants to know how the company's environmental activities affect the cost of each product. Get believes that the main source of the environmental problems lies with Celerium. The controller has assembled the following data to help determine this. Okay, so we have here information about the number of units produced for each product, Celerium and Millennium, the engineering hours, kilograms of solid residues treated, inspection hours, and clean up hours. We also are provided with the environmental activity costs for each of these 4 activities: designing, treating residues, inspecting processes, and cleaning up the lake. So there are 4 activities, and these are the costs provided. So the first requirement is to calculate the environmental cost per unit for each product. And we are also asked which product appears to be more environmentally harmful based on our calculations. So for some of you who still remembers activity-based costing, we will apply the same principle and steps in this scenario. So the first step is to calculate the activity rates. So these are the activities, 1, 2, 3, 4. These are their costs. And what we need to know before we can calculate the activity rates is which are the activity drivers. So what do you think drives designing process? Well, it looks like engineering hours has to do with process design, isn't it? So we have to use a little bit of common sense here, even if it is not given. The activity driver for designing process must be the engineering hours. What about treating residues? Well, kilogram of solid residues is provided there, so the activity driver for testing residues must be the solid residues treated. For inspecting processes must be inspection hours, and for cleaning up lake must be clean up hours. All right, so all we have to do is to really divide each of these costs by the drivers. All right, so what is the total number of engineering hours? For Millennium, it used 750 engineering hours, and Millennium used 2,500. So the total number of engineering hours must be 3,250. So 81,250 divided by 3,250 engineering hours. So our design process activity rate must be $25 per engineering hour. So for treating residues, we'll do the same. 300,000 divided by how many hours or how many kilograms of solid residues were treated is 15,000 plus 5,000, so that's 20,000, and so it is $15 per kilogram. All right, for inspecting, so it's 72,000 divided by the total of inspection hours, 9,000, so that is $8 per inspection hour. And for cleaning up lake, 100,000 divided by 4,000 plus 1,000 is 5,000, so that's 20 per clean up hour. So once we've got the activity rates, we can now allocate to each of the 2 products, Celerium and Millennium. So for designing process, Celerium uses 750 hours. So 25 times 750 is 18,750, and 25 times 2,500 is 62,500. So we'll do the same for the other 3 activities: treating residues, inspecting processes, as well as cleaning up lake. So once you have already calculated the allocated environmental cost for both Celerium and Millennium, you just total that up, and you've got the total environmental cost for Celerium of 371,750. All right, we haven't finished it because we need to divide that by the number of units produced for Celerium. So if you divide 371,750 by 500,000, you will get the environmental cost per unit of 0.7435 or 74.35 cents. For Millennium, our total allocated environmental cost is 181,500 divided by how many units did we produce. For Millennium, it's 1 million, so that means our cost, environmental cost per unit is 0.1815 or 18.15 cents. So given that Celerium has the higher environmental cost per unit, then that means it is actually more harmful. So we can say that the suspicion of get worried is actually supported, not refuted. All right? Because she believes that the problem lies with celerium. Okay, let's move on to the next requirement. Would life cycle cost assessment provide stronger evidence for the environmental suitability of each product? And we are asked to explain. So the answer would lie on the discussions that we have done earlier. So you'll see that life cycle assessment or cost assessment would actually provide a stronger evidence for the environmental sustainability of the product because, for one thing, we recall that there are 3 steps in life cycle assessment: the inventory, impact, and improvement analysis, right? So of the 3 steps, the first 2 are concerned with identifying the materials, energy requirements, environmental releases, and the environmental effects of competing process and product designs over the life cycle of the products. So it's not just in the production stage, but in the entire life cycle of the product. That's why it will provide a stronger evidence for the environmental sustainability of the products. All right. Therefore, life cycle assessment will actually provide a more comprehensive analysis of the environmental impact than just calculating the environmental cost per unit, unless, of course, we calculate the per unit environmental cost over the entire life cycle of the product. But from our analysis using the activity-based costing, that's not likely the case. It's not likely that we are looking at the environmental cost of celerium and milerium over its life cycle. All right. Now we are in the last learning objective, and that is to analyze and measure the social, environmental, and financial impact of a project or proposal. So here we have an aluminum refinery that's planning to implement an environmental management project. The project is to purchase new equipment that will lower operating costs and reduce emissions from the refinery, which are currently spread over nearby residential districts. We are provided here with a table with the initial outlay and additional cost for each of the 5 years, the cost savings, and the reduction in emissions in terms of the tons of airborne particles. So that's 50 tons for every year. It's also estimated that each ton of emissions currently causes health costs that average $2 per annum for each of Gladstone's 50,000 residents. So the first requirement is to calculate the net financial cost to the refinery of investing in this new equipment. We will ignore the time value of money for this particular analysis. So here, the financial cost to the refinery of investing in the new equipment, as you can see, we will have the initial outlay, which is simply as given there, 578,000. So that is an outlay. For each year, from year 1, we have 289,000 in terms of additional cost, but we will have cost savings of 41,000. When we deduct the cost savings from the additional cost, we'll get 248,000 net cost. We'll do the same for year 2. 260,000 is the additional cost and a savings of 41,000, so that's 219,000. And for years 3, 4, and 5, the additional cost and the cost savings are the same. So when we deduct 250,000 minus 41,000, we'll get 209,000 for each of years 3, 4, and 5. So what we can see here is the total cost to the refinery of investing in this new equipment is $1,672,000. So that's pretty straightforward. Let's go to the second requirement, and that's to calculate the financial cost or benefit to the community over the 5 years. So we have 2 points of view here. From the point of view of the entity itself, which is the aluminum refinery, and now from the point of view of the community over the 5 years, what would be the financial cost or benefit? There are 50,000 residents, and we are analyzing it for 5 years. All right, and it says there are 50 tons of reduction in emissions per year. And so we'll multiply the 50,000 residents times 5 years times the 50 tons, and it says here that on average the health cost per annum per person, per resident is $2. So we'll multiply that by $2. We can calculate here that there is a $25 million financial benefit to the community. All right, so you can see here from the point of view of the company, they are going to be spending $1.672 million, but the financial benefit is not going to the company but to the community. So let's go to requirement number 3. What other information might you need to gather in order to undertake a more comprehensive analysis of the project? So these are just some of the information that you need to gather. As what I've said, the potential availability or the potential benefit goes to the community. So let's have a look at potential availability of government assistance, such as grants or sponsorship, given that the cost of the project are borne by the company, but the community benefits are high. So that is a very important information to gather. Also, the potential for dormant medical conditions caused by toxic byproducts that may arise to a class action in the future. So even though the company or the refinery might be spending more than 1.672 million, what's the potential of them being sued by the residents in the future? If the potential is high that they will be sued in the future, perhaps it's worth investing after all. All right. Also, an investigation into an estimation of the effect of carbon tax. Here in Australia, there was a time when we had carbon tax, but it was abolished after much lobbying from companies. But it might come back again. So the potential or the impact of carbon tax in the future could be something that can be looked at. Also, an investigation into the state of current technology and technology in the pipeline for reducing toxic pollutants and carbon emissions, especially as the new equipment under consideration reduces but not eliminate them. So if there are new technology in the pipeline that could actually, well, not just reduce but eliminate carbon emission, then that might be better. So it might be worth the wait. Another thing that they would have to consider are the effect on export demand of both reducing emissions and not reducing carbon emissions, given that countries are in the process of addressing climate change. If they would lose potential buyers from overseas as a result of not using this technology that they are considering, then again, they'll need to investigate that. And finally, the effect on their reputation and the flow-through economic effects of voluntarily implementing an environmental management system could be something that they could take into account. All right. Here is another proposal that we will analyze using both the financial and environmental lens. So here we have Brisbane City Council, a governmental body that is looking at buying 2 new minibuses for transporting senior citizens to the Gold Coast and other areas. A bus is expected to travel 250,000 kilometers per annum, and it will last for 3 years with 0 disposal value. So there are 3 types of buses that look attractive. What are these? The conventional petrol engine that can be converted to LPG, the petrol electric model, and the diesel. The operating information for each of the bus are provided here in this table below. So the first requirement asks us to consider which of the three buses is the most attractive on financial grounds. And we are asked to state clearly any assumptions that we need to make. All right, so let's have a look at these calculations. Straight away, the first relevant cost would be the purchase price. All right, so the purchase price are given for each of the three alternatives. 175,000 for petrol LPG, 590,000 for petrol electric, and 292,500 for diesel. So that's straightforward enough. What about maintenance costs? Well, they told us that in the petrol LPG, the maintenance cost is 69 cents per what? Per kilometer traveled. All right, so it's 69 cents multiplied by what? 750,000 kilometers. Why is that? Because up here on the first paragraph, it says that a bus is expected to travel 250,000 kilometers, and we are analyzing it for 3 years. So 250,000 kilometers per annum times 3 years is 750,000. So 69 cents times 750,000 will be the maintenance cost for the entire 3 years for petrol LPG. So that gives us 17,500. For petrol electric is 84 cents multiplied by 750,000, so that's 630,000. And for diesel is $1.35, multiply that by 750,000 kilometers, so that's 1,012,500. Let's move on to the fuel consumption. So for the petrol LPG, we are told that their consumption would be 35 liters per 100 kilograms if we use petrol. So there really are two choices here. One is to use petrol, one is to use LPG. So let's look at the petrol option first. All right. So if it's 35 liters per 100 kilometers, so we need to calculate it for 750,000 kilometers. So let's divide 750,000 kilometers by 100 kilometers first, because it's 35 liters per 100. So 750,000 divided by 100 is 7,500. Then we multiply it by 35. And how much is the cost of petrol per liter? It says here is 125 per liter. So our calculation would be 7,500 times 35 multiplied by $1.25. So that's $38,125. Now, if we use LPG, not petrol, but LPG, it says here that the cost would be 15 liters per 100 kilometers on LPG. And LPG costs 45 cents. The calculation would then be 7,500 multiplied by 15 multiplied by 45 cents. So it's a lot cheaper to run it on LPG, the gas. So it's only 50,625. Let's move on to petrol electric model. It uses a lot less in terms of fuel. It's 10 liters per 100, and the cost is still $1.25 per liter of petrol. All right, so 7,500 times 10 times $1.25, so that's 93,750. What about for diesel? It's 15 liters per 100, so it has a lot less consumption when you're using diesel. The diesel is cheaper as well at $1.20. So our calculation would be again 7,500 times 15 times 120, so that's $135,000. All right. What else do we need to consider? The cost of replacing the engine. All right. So for the petrol LPG model, the cost of replacing the engine is $14,000. We only need to replace it once. Why is that? Because it says the life of the engine for the petrol LPG is 400,000 kilometers. Now, we need to use the bus for 750,000 kilometers for the entire 3 years, all right? So, by the end of the 400,000th kilometer, we'll need to replace the engine. And when do we need to replace it again? At the end of another 400,000. By then, the 750,000 kilometers have already been run. All right, so that means we only need to replace once. 14,000 would be the cost of replacing the engine once in 3 years. What about for petrol electric model? Is 450,000 kilometers is the life of the engine. So just like in the petrol LPG option, we also just need to replace the engine once. So how much is the replacement cost for engine in the petrol electric? It says 19,000, so just once. What about for the diesel? It says the cost of replacing the diesel engine is 35,000. But the life of the engine is 1 million kilometers. So do we need to replace the engine? No, because we are only going to use it for 750,000 kilometers. So that means there's no need to incur any cost to replace the engine in the diesel option. All right, so once we've done all that, we'll just total up, and the total cost for running the bus using diesel is 1,440,000. For petrol electric is 1,332,750, and for petrol is 1,034,625. But if we use, that's for using petrol, if we use the LPG, the gas, it's a lot cheaper, and it's only $757,125. All right, so what is our answer in requirement 1? So we have done the calculation, and it looks like the petrol LPG is the winner, with the LPG being the most financially efficient of all. All right, so it would be better if we actually can use the LPG over the entire 3-year life, because it's the cheapest alternative, 757,125. But even if we use the petrol, it will still be cheaper compared to the 2 other alternatives with 1,034,625. All right, let's go to number 2. Repeat the analysis, but only taking into account the environmental data. So what are the environmental data here? Carbon emissions would be 1. What else? Anything else there that has to do with environmental, or that has an environmental component to it? Yes, the consumption of fossil fuels would be 1. All right, because this is the equivalent of energy usage in terms of vehicles. All right, so on environmental grounds alone, what do you think will be the winner? Well, the petrol electric wins hands down. Why is that? Because in terms of CO2 emission, it has the lowest carbon emission, 15 grams per kilometer, as opposed to 250 grams for diesel and 290 grams for petrol LPG. Also, it has the least usage of fossil fuel, 10 liters per 100 kilometers, as opposed to 15 liters per 100 kilometers for diesel and 35 liters per 100 kilometers for petrol LPG. Let's go to the third requirement. Here we are asked to write a recommendation to the council outlining which bus it should purchase. So when you are writing a recommendation, you address it, of course, to the Brisbane Council and name yourself, and the subject is evaluating the proposed minibus models. The best way to write a recommendation is to really just point out what you have done in terms of the analysis, but leave the decision to the Brisbane Council management. So here is an example of the recommendation letter. The council should purchase the petrol LPG model if it wishes to minimize the financial cost and run mainly on LPG. and then you'll provide the calculation. All right. However, this model results in higher carbon dioxide emissions, particularly when compared with the petrol-electric model. The petrol-electric model ranks the highest on environmental grounds. However, the cost of this model is significantly higher than the petrol LPG model over the 3-year life of the bus, particularly if the petrol LPG model is run on LPG alone. So the council needs to consider its priorities. Is it willing to the extra cost of the petrol electric model to achieve a better environmental outcome? So this really is putting the decision back to the Brisbane Council, but we are providing the analysis that has been conducted in order for them to make an informed judgment and decision. All right, in conclusion, I'd like to go back to our Bible verse in Genesis chapter 2 verse 15, and just reminding us that really we have been commissioned by our Creator. God took the man, not just Adam, but really it represents mankind, and put him, or put us in the Garden of Eden, which represents our earth, to work it, yes, but also to take care of it. It's important to remember that we can't be successful in a world that fails. So we have Bible quote from the first book of the Bible, now in the last book of the Bible, Revelation 11:18, actually has a pretty scary declaration. The nations were angry, it says in Revelation 11 verse 18. And your wrath, this is God's wrath, has come. The time has come for judging and for rewarding your people who revere your name, both great and small, and for destroying those who destroy the earth. So God's wrath will be for those who destroy the earth. Remember the 3 P's as we conclude this lecture. The 3 P's includes planet, the people, and last is the profit. That's the financial aspect. But perhaps we should even think of another P, and really that is purpose. What is our purpose here on earth? Is our purpose just to work it? Or is our purpose really not just to work it, but to take care of it as God has commissioned us to do? All right, so I would leave you with that thought, and I will see you the next week. Bye for now.